Let's get to that aforementioned JOLTS data. Let's get to Rick Santelli. Hey, Rick.
Hey, Carl, indeed, JOLTS. This is the December number. It's always 2 months in arrears, expecting 8 million-ish. 7,600,000. That is the smallest month-over-month job openings. Well, going all the way back to SEP of last year. There was a revision upward, though, of November, and that was from 8,098,000 to 8,156,000. Now, let's look at factory orders for December, shall we? Expected down 0.8, pretty much as expected, down 0.9. That would be the weakest going back to July of last year. But we did have a revision in the wrong direction, unfortunately, from -0.4, our last look, doubling down to -0.8. So back-to-back weakness in factory orders. Now, let's look at ex-transportation. Dramatic improvement, up to 0.3. Durable goods, now these are final reads. We get rid of the mid-month read. Mid-month read, -2.2. It remains at -2.2. Once again, strip out transportation. We can see where the drag was. Moves up to up 0.3, exactly as the mid-month read. Now, let's look at capital good orders, non-defense ex-air, a proxy, of course, for capital spending. Up 0.4. The mid-month read was up 0.5. Still pretty solid all in all. This is the second consecutive positive number back-to-back. November was a very strong up 0.9. That was up 0.9. And finally, if we go from orders to shipments, comes in 1/10 lighter than our mid-month read, from 0.6 to up 0.5, or 0.5%. If we look at the pre-opening stocks, they were doing better. Now they're even doing better that they're open. If we look at interest rates, 4.22 and a 10, that's down 3. If you look at it, that was a 2. A 10 is 4.54. That's basically down 2 basis points. It certainly seems as though the big story today, of course, is going to be Disruptor 50. In my opinion, it's Disruptor 47. That's the current administration. The market seems to be writing off a lot of the trade negotiations. Is it really a trade war? Don't think so. Back to you, David.
All right, Rick. Thank you. Rick Santelli.